Good morning, everybody. This is Jeanette, and welcome to our Sage 300 CRE month-end class. Before we get started, I want to remind you guys that there are two attachments with your GoToMeeting invitation. One is the PowerPoint that we're going to be looking at today, and the other is a Word document that we're going to actually follow that has some example screenshots and report results in it. So if you don't have that one printed out yet, if you could go ahead and get that printed, then you can follow along. Some of the reports that are in the handout or actually a little bit will be easier to understand versus what I'm actually going to show you on the screen. So I think that handout will be very helpful for you. Let me get my GoToMeeting screen out of the way. All right, so let's go ahead and get started. The agenda for today, we're going to talk about some account rules, specifically around specific GL account numbers in Sage 300 that you want to be careful of how information gets to those accounts. If you don't follow the rules that we're going to talk about in a moment, you're going to find that your reconciliation each month is going to be more difficult because of not following those rules. Once we talk about that, then we're going to go through a couple of simple reconciliations within the software. We're going to specifically take a look at the AP to GL and the AR to GL reconciliation. We're going to follow that with a discussion about the closed month tasks in several of the applications. And then lastly, I'm going to show you the reconciliation tool that you can run from the Sage desktop. That might be easier. Some of you might think it's easier or more simple than running the reconciliations within each application. All right, so account rules. Your AR account should only have information coming in from three places within the software. From accounts receivable, it should be affected by inner invoices and cash receipts. So when you post either of those two things, it will affect your AR account. And then billing, if you're using the BL module to produce your invoices through Sage, when you post those invoices, it will actually send that information through to AR, and then AR will pass it off to General Ledger. There should be no other entries coming into the accounts receivable account other than those three places. And then it's the same for your AP account. AP should only be affected by inner invoices and print checks. There should be no journal entries to that account. No other module should be using that AP account for anything. Your cash account should have things coming in from AR, which are the cash receipts, from AP and payroll, which are print checks. No journal entries should be coming in through to that cash account, directly through General Ledger, and nothing from any other module should be coming in to that cash account. The cost accounts within your chart of accounts all need to be job related. So you shouldn't be using these cost accounts for journal entries in General Ledger or for any cost maybe that you're entering in AP, in inner invoice that does not have a job number. You're going to be reconciling your job cost to General Ledger, and that's based on those cost accounts having job numbers attached to them, the transactions. So again, the big bullet at the bottom of that screen, no entries should be made to these accounts in GL. This is where a lot of times in the reconciliation when you're out of balance, that's one of the first places we look, is to see if a manual entry was made to one of those accounts. Right, our first reconciliation we're going to talk about is AP to GL. You want to make sure that everything has been posted for the month. You want to make sure that you run an aging report for the period that you are trying to reconcile. And then you're going to compare that report to one of the general ledger reports, which we're going to take a look at here in a second. So it's a pretty easy reconciliation. You're just making sure that everything is posted, and then you're comparing an aging report to a GL report. Now, I've got a screenshot in your handout on page 1, at the bottom of page 1, for GL, the GL entry settings button within AP settings. So to get to that screen, you're going to go to File, Company Settings, AP Settings. And then on this screen, you'll go to the GL Entry Settings button. And the reason I've included this here is so that you can make sure that you are looking at the correct accounts when you run the general ledger. Make sure that you are looking at your AP account or your subcontract payable account. If you're doing, if you've separated your purchase orders from your regular accounts payable. Right, so here on this window, then you are just verifying what account numbers you are reconciling accounts payable to. All right, and then you're going to go ahead and you're going to run. What I recommend you run is under Reports, Cash Management, Invoice Aging with Cutoff Date. And here you'll enter in your aging date. And because I'm using the construction sample data, I've got to put an older date in here. I would leave the aging basis as accounting date because that will match up to what is in general ledger. And then as far as the retainage, if you are holding retainage back on your subs and you want to print a retainage column, leave this checked. If both the retainage and the AP is going into the same AP account, you can check this box so that you're not having to add those two columns together when you run the report. Okay, so this would only be if on your AP settings screen, on the GL entry screen on page 1, that both the accounts payable account and the retainage payable account are the same. Then you will want to check this box. Right, and then I'm just going to do a print preview. Now, in your handout, the two reports that you're seeing are slightly different because this was an older data set. And so I'm going to go ahead here and go down to the bottom of the last page. And this is what you're comparing here, these report totals and this retainage column to your report in general ledger. So I'm going to go ahead and run a financial statement here, and I can just go ahead and run the balance sheet. Actually, let me verify what month we're in here, so I know if I need to roll back. Oh, this one's been moved ahead. So, I may just have to go ahead and run this slightly different. Let me close this and let me do a condition here. We'll just run it on one company here. See if there's any money in here, stuff in here. Okay, and then over here, I'll go ahead and run the financial statement. And that's company 10. I need company 21. That's way off. Or maybe not. So let me add these two together. So 5377. So I need to add my AP account, the 53,977, with the subcontracts payable. And that comes out to 339,832. And if I compare that over here, I'm off here just a bit. So I'm going to subtract 341, 570, minus 341, 558. So I'm off 1726. So I'm out of balance for that particular company. It looks like though like the retainage, the 13,729 is in balance. So retainage is in balance, but my accounts payable is not. So here's where we need to troubleshoot then. And as you can see in your handout, the handout was also off. It was off $300. Now on the next page, page 3, one of the first things that we will have you do when you're in an out of balance situation is we will have you run under reports. We'll have you run entries by account, and we'll have you run that on the new file. And the reason we're running this is to see if there is anything in the new file that hasn't been posted yet. So if we come down, let's see if there's anything for company 21. There isn't anything in here for company 21 for accounts payable. Okay, so we don't have anything there to look for. The next thing we need to run is under reports. And I don't have this in your handout, but I would run entries by account again, but this time run it on the current file. So I want you to make a note on page 3 in your handout. You're going to run the entries by account twice. Run it first on the new file to see if there's anything that hasn't been posted to your AP account, and then run it again on the current file, and this time you're going to add a condition to the report that application of origin is equal to GL. So either equal to GL, or what might even be better is not equal to AP, because the only thing that should be in there is AP. So you add that condition and then look to see if you have anything. And of course, we want to do a range here. You want to do a range on your AP account. Actually, let me do it on both those accounts. Okay, so there's nothing there that has caused it to be out of balance. Okay, so again, 2 reports on, one on new and one on current. The next thing that you want to do, now in the example in your handout, you can see the report on the top. Our AP was out of balance by $300, and there was actually $300 sitting in the new file that needed to be posted. We also ran the report, reconciliation report called AP Summary. And this is under reports, it's in accounts payable. Close out of here. And it's under GL reconciliation, and it's called AP Summary. The example of this is on the bottom of page 3 in your handout. I'll show you just the first screen of this. I'm not going to actually run it. This is a crystal report, and depending on how big your data is, it will take a while for it to run. You're going to put in here where it says specified transaction cutoff date. You're going to put in your GL accounting date that you're trying to reconcile. And then if it's not the current period, and you've already closed general ledger, you need to tell it to roll back. This is kind of like the prompt that you have on a financial statement to roll back to a different period. So if this master file was still maybe back in March, I would put a March date in here and I would roll it back to. The example at the top of page 4 shows you that it's out of balance. So it's going to list all of your AP accounts on the screen. It'll show you what the AP balance is inside AP and then what the GL balance is. And if they don't match, you'll see the account highlighted in red, and it will show you the difference in the difference column. You can actually double click on that and it will show you the batches that are out of balance. And then you can research from there. Now the other thing that you can run is the screenshot totals by batch. It's right below that on page 4 in your handout. This is also in GL, and it's called totals by batch here. And you can do a date range, again, from the first of the month to the end of the month, and that will give you a list of totals for each batch so that you can look through to see which batches may have not balanced. And again, the screenshot for that, this is also a crystal report, so I'm not going to run it because it takes too long to run. But if you look at the report at the top of page 5, again, it shows you, again, the totals per batch, debits versus credits, and we can see here that we've got a credit difference on one of those AP accounts. So researching this could take a little bit of time, depending on where you find it's out of balance at. Usually, probably I would say, 90% of the time, it's going to be one of two things. There's an entry in the new file that needs to be posted, or something has been entered to that AP account outside of AP, and you just need to correct that entry or post that entry. Rerun your reports, and you should see that you're back in balance. The other issue that I see sometimes is dates. You may have gone in and tried to correct an invoice, and you put in an incorrect accounting date when you made the change. And then if you see that it's incorrect and you go back and try to correct the correction, you end up maybe doubling up the mistake or reversing it out. You make the correction in and out of the wrong period. Right. So that is accounts payable. Accounts receivable is basically the same thing. We're making sure that everything has been posted in both AR and GL. We're running an aging, and we're comparing that aging to a general ledger report. So let me go ahead and back over here. Open up accounts receivable. Okay, I'm going to run an aging, and the one I typically run because it runs faster is the detail by customer. Again, give it an aging date. Let's see. And I'll need to add a condition here. company. Add it for the account. That should do it. Okay, and then we'll go ahead and we will find the report totals here. And then back in General Ledger, I'm going to run the financial statement again. Let me run the individuals. And we'll get down to 3. Okay, so let's compare here. Oh, this is way off. 93. Let's look back. 93. Where's the retainage? Receive. Oh, it's way off. All right, so we need to take a look now. Inside General Ledger, we're going to follow what we did with AP. So let's take a look first at what do we have sitting out in the new file. And I'm going to condition this so that the company is just equal to 21. So we don't look at all the 10s there. So let's see if we have anything in. No, nothing in accounts receivable that needs to be posted. Okay. So the next thing I'm going to do is I'm going to run this report again on the current file. And let me grab AR account, and then I'm going to put a condition on it that the application of origin, we'll just say, is equal to GL. So we'll see if anything has been entered in manually through General Ledger. No. So this one is going to take a little bit more research to see what's happened to the two. Now, in your handout, I've got some examples. I've got an example of the aging report detailed by customer, and you can see that it is out of balance between the two. It's also, the retainage is also out of balance. So if you look at the new file here, you can see that there are some entries in the new file for both company 10 and 21 that need to be posted. Okay. And again, the same reports, the same additional reports running the reconciliation report, the AR summary report, can also help with this. So in AR, again, you can run under reports. There is reconciliation, and we have the AR summary report. It's the same concept. You'll put in the date range, and then if you need to roll back, because it's not the current period that you're in, you'll put the number of periods to roll back. And then when you get the report, you'll look for the lines that have red, that are marked in red on the bottom of page 7. Now, it's pretty much the same between AR and AP. When those two applications are out of balance, it's either something in the new file that needs to be posted, something was posted to that account from an incorrect application, like General Ledger, or it's a date issue. I see that quite a bit, especially at year end when people are not comfortable with the new year as they're entering transactions, and then when they try to correct it, they either it doesn't correct itself, which when they think that it should have, or they end up doubling it up where they don't want to. Okay. So one of those three things is where you need to start. Right, the job cost reconciliation. You want to make sure, again, that everything has been posted. You're going to run the report's entries by job, run it on the new file to make sure that everything has been posted, and then run the job cost summary report, which is on page 8 in your handout. Now, what this report is going to do, get back here and open up job cost, is it's going to go through General Ledger and it's going to list every account that you have marked as a cost account. So over here, under Setup, Accounts, we're looking for accounts that are marked as a cost. It's expecting that all the transactions that have been entered to those accounts will have a job number on the transaction. So it's some type of a cost that's come from payroll, from accounts payable, or job cost itself. And then it's going to compare that to the activity over in job cost, and anything that has hit General Ledger with no GL account number is going to show that activity being out of balance with job cost, and you'll see an activity difference there in the middle column. And that's what you need to research. Now, if this report comes up and it shows you've got something in red, the first thing that I would do is run under reports, again, run entries by account on your current file. And I would do, I think we can do two conditions here. You can index over to the GL account, and you can say account type is equal to a cost, and on the transaction, the job is equal to blank. So those two conditions there will show you any cost account transaction that does not have a job number on it, and that should equal the total that you have in your difference column, activity difference column. Now, I'm not sure on this version of the sample data if I okay that. Let's see if we get anything to come up. Aha. Now, depending on how you're interfacing between General Ledger and payroll, this is going to come up because of the payroll. Now, not this. Let me go back. Because this is summary, it's not going to have a job number. So I would expect to see that. What I wouldn't expect to see is here where we've got this cost of sales account, and we've got equipment entries coming through, and they don't have a job number on it. So I would need to research this to see why this account number has entries coming through with no job number. And if it's valid, if that's what you want to see, then it's okay. But I would just double check that each month that that's exactly what's showing up. So you may just leave the that account number, which is at the bottom of the report on page 8, the cost of sales equipment. That number may be okay, because notice job cost doesn't have any values for it at all either. Okay. So that is your reconciliation. As far as job cost is concerned, you're just making sure that the information balances between the two modules, that those cost accounts have job numbers. Okay. Now, for cash management, let me go back here again. We'll talk about it. I think. Yep. This one is can be a little bit more tricky. one thing that you want to double check each month is that report that is sitting at the bottom of page 9. You want to make sure that the CM balance to GL, that this matches. And what you're balancing here is your cash management balance to your future balance in general ledger. And then next, you're going to run the bank account verification report. I'm going to show you that here in just a minute. And then lastly, you will run the bank reconciliation report. And that number, if you look at the reports in your handout on page 9 and 11, if you look at where it says register balance as of statement date, it matches back to the cash account balance on the balance to GL report. And that's what you're looking for. Now, the other thing that you're looking for, let me bring up cash management. And sometimes, if you are seeing a difference in these reports, sometimes running this report will actually show you where you need to make corrections. So you're going to run reports, reconciliation, and you're going to run the bank account balance verification. I'm going to go ahead and run this one. This is a crystal report. It's going to take a minute to come up and show us the information on the banks. Okay. So it's going to show you a page for each bank. Your banks will be listed over here on the left-hand side. And what you're looking for on these three totals, the bank balance, the CM posted balance, and the register balance, you're making sure that there's no variance here. If there's a variance, that means that something has been modified or changed in the edit register program, and maybe even changed back. So you may have gone in and changed maybe a status, a reconciliation status, so you could make a correction, and then you changed it back. That throws off these totals. What you're correcting and what should be the amount on the bank is anything in the derived column. So if there is a variance, you're going to come into the bank and you're going to change that amount to whatever you see here in the derived balance column. So each one of these totals has that column. So it's here, the posted balance is here, and the register balance is here. You should look at each of your active banks. So you see right here, this one's got a variance. Okay, so something's off here. This one's got a variance. I need to go in and put the derived amounts in on these banks, on this bank for these two amounts in order for it to balance. Now, the way you do that is you'll need to come in under Tools, Options, and you will need to check the Audit Setup Activity checkbox. By doing that, you can come in on the bank account. That opens up these balances, and then you can change them. The register balance and the bank balance are on this window, this first General tab, and your cash CM posted balance is here on the totals by GL account, cash account. This number needs to balance to this number here on the grid. And you can change either one of these or both so that they match. And usually that's what will correct the CM to GL report. Sometimes this grid gets kind of messed up and it won't balance up here to this posted CM balance. You may have had multiple accounts at one time associated with this bank, and that account is still on this grid, and there's an amount in here that shouldn't be there. So you can come in with Audit Setup activity turned on, and you can correct those. Now, if you're still out of balance after correcting the account, after looking in, the other thing again is to look in general ledger and make sure that nothing has been posted to that cash account. If it's still out of balance, then you need to contact us for us to kind of take a look at your data with you to see if we can figure out where along the line it went out of balance. And that's the same with AP and AR as well. One of the things that we'll ask you is, when was the last time it did balance? Because you should be running these steps every month at the end of the month. So if you haven't reconciled for several months, we will backtrack. We'll actually we might even get a copy of your data and go backwards and find the spot where it went out of balance. And it could be that it's been out of balance for a while, and sometimes it's easy to find if it's been out of balance by the same amount. We'll go backwards until we see that it's in balance, and then we'll start looking for the transactions that may have caused it to go out of balance. But again, this is something that you should be doing each month, and when it goes out of balance, you should research it right away. And you can run these steps. You don't have to wait until month end. You can run the reports and you can reconcile yourself during the month, and that might be a good idea too, especially if you're a huge company, a lot of transactions. You might want to do this, run the reports a couple times a month to make sure that things are being posted correctly, to the right accounts. Okay. All right, the close month steps. AP and AR, we don't have a close month. So what you're doing as far as the month-end process is just to reconcile, to make sure that things are in balance. So AP, AR, and cash management, there's no close month routine. It's just a matter of running reports, comparing, and making sure that they're in balance. Job cost does have a close month. I'm not including payroll in this session because payroll has to be live, current, and moving forward constantly. So if you have the payroll module, you should already be doing a close month as you process through each month in the year. Job cost, you can only go 1 month into the future. So you need to be sure that you're at least within that time frame. You don't necessarily have to close your month right away when you get to the end of the month. You can leave it open and continue into the new month. You just need to make sure that you close before you start doing transactions that are beyond that 1 month. Job cost and contracts, which is CN, you need to run those close month routines at the same time. You need to stay equal, basically. And if you have equipment cost, again, make sure you close it at the same time as well. So equipment does have a close month. Now, when you run your close month, if you take a look at page 12 in your handout at the top, and a lot of people don't realize this or forget, the close month routine in job cost prints a report to a print file that shows, it lists every job in your master file, and it's comparing a couple things. It's comparing or balancing your estimate, your commitments, your costs, and your dollars paid. So 4 things are being balanced. And it's balancing that from the transaction level up to the category level, up to the cost code level, up to the extra level if you're using extras, up to the job. If it finds that one of these things is not balanced between all of those levels. Then you're going to see on your report, if you look at towards the bottom of that report at the top, it'll tell you that job it's not in balance, and it tells you which value is out of balance. If you look in that next column next to the job number, you will see that the total estimated cost is off. So it's off between the job and the accumulated value. It's off by $2,835. So you need to peruse this report. What's happened is that during your post, and I can't tell you why, you can go for years and nothing is ever out of balance, and then one day, boom, one of those jobs is out of balance. What's happened is that during a posting routine, it hiccuped and it missed one of the records. So the transaction made it through, but it missed either the category or the cost code or the extra or the job, even the job total. Okay. Now to find this inside job cost, under reports, get there, and it's under reconciliation, there is a close month validation report. You're going to run this on your current file, and here at the top, you're going to specify which of those four totals is out of balance. So in this example, since it's telling me on the report that it's the estimated cost, I'm going to pick estimate. And then I'm going to use the range button, and I'm going to pick the job that it told me was out of balance. So you don't run this on all your jobs. You run it on the specific cost and the specific job where it said it was out. And then you'll do a print preview, and it will give you and list for you all of the information for that job. So here it's showing us the job, and then it shows us it's broken down by cost code, and then within that cost code, it's broken out by category, and then here are the cost code totals. So what you're looking for is where these numbers are not the same. You're looking for the record, whether it's a category record or it is a transaction record. So it's going to be in one of these three columns. Let me get to the bottom. So you need to look again at the bottom to make sure, once you find it, make sure that that's the number that it's truly out of balance. So you want to come down to the bottom and make sure that that's the only record that's off. To fix this, if you look at page 12, it says turn on audit setup activity again. You have to manually correct the record that didn't update. Because if you try to make an entry to correct it, what's going to happen? It's going to try to post to the job, the extra, the cost code, and the category. You can't make it only update one of those records. And so what we will do then is we'll manually update that record. Okay. With audit setup activity turned on, we can come in here and we can actually pull up the record that's incorrect. And we can go to the totals column and we can make the correction. Now, if you're uncomfortable doing this when you find something like this out of balance in job costs, we can help you with that. We can, look at the report with you, find where it's out, and then help you with the change on the master file. And then, of course, as always, you want to make sure that once you're done making your changes, that you come back in here and turn off your audit setup activity. This is something that you should never leave turned on because it opens up, like you've seen, it opens up those master file accumulation fields for you to make corrections. And you don't want, by accident, for someone to go in and make a change that you didn't intend. All right, the other thing that I wanted to show you here, and I've got screenshots in your handout again, is the reconciliation tool. Now, this can only be run from the Sage desktop. And it's actually under, if you click on applications here and you have the list of modules on the left-hand side, you'll see additional tools listed here. And there is a reconciliation option here at the top. And this is the kind of the home page for that. And so it'll walk you through, if you want to go module by module, you can. The applications are listed here that will walk you through the reconciliation procedures. You can also do the reconciliation dashboard. Click on that. Okay. So I think we have to have all of these modules closed. That's the one drawback to this, is you do have to have, because it opens up each of these applications in order to run that dashboard, or if you're trying to do the individual modules, depending on how many licenses you have, and since I only have one for each, you've got to make sure that those modules, that you have a use that you can get into this with. All right, so let's see if I can do this for that date, and let's see what happens. I'm not sure. This is a crystal report, so it could take it a while. Oh, not too bad. All right, so this is kind of bad, but it's probably due more to the fact that some of these modules, these modules here are actually in the date. I've actually moved this module ahead. But yeah, here it's showing us the kind of a high-level screenshot for GL, AP, and cash management. So from here, if you wanted to use the reconciliation tool, if I can close this, come on, close. Once I run the dashboard, then I can come down here and run these individuals and see here how it's kind of walking you again through the steps that we looked at individually. So it's walking you through running the post to make sure everything is posted. It's walking you through running the AR summary report, running the totals by batch report. There's quite a few, links here to those crystal reports that it might be easier for those of you that are not as new to Sage or the TS main or running the full module to run it from here instead of going in and trying to run each individual report. Okay. The last page in your handout is a checklist, and I don't have this actually in the PowerPoint, but if you look at page 17, you'll see the month-end checklist, and it just walks, again, it's just a summary of the things that we've already looked at as far as making sure that everything is posted, which reports to run in each module, and then it also, the ones that have closed month, walking through the closed month routine. Now, as far as general ledger is concerned, it's all kind of tied together. Make sure that everything is posted again. If you have any journal entries that you need to make, go ahead and use task record entries to make those. If you have any allocated expenses or automated entries like recurring entries, go ahead and post those. Make sure the new file has been posted. And that's something that you might want to check periodically during the month. It doesn't hurt. Some of the applications, even though you're set to an automatic post, sometimes those transactions don't automatically post, especially corrections from AP or AR. Sometimes those reversing entries and correcting entries will sit in the new file. And I'm not sure exactly why, but just to be on the safe side, I would run that post routine during the month as well. And then again, re-verify that at the end of the month, run your ledger, and then run your financial statements. And then lastly, run close current period. Now remember that, you might want to mark on this, job cost can go 1 month into the future, contracts can go 1 month into the future, general ledger can go 6 months into the future. And then make a note at the bottom, of course, payroll does not allow you to go into the future at all. You can go in the past, but you cannot go into the future. So general ledger you can hold open. When you get to the end of the year, you don't have to necessarily close right away into January. You can leave it open if you want. But also remember that you can open prior periods and record prior entries. So I wouldn't leave general ledger open until you get your entries from your accountant. I would close general ledger in the normal time frame that you normally close during the year. So if you hold it open for a few weeks or even a month, go ahead and close the year and move forward, because you can open that year back up and make your entries and post it and reclose those entries to retained earnings. You always have that option. Okay, which is what I have here under tips and reminders about the periods that you can go into the future. AP and AR, no closed month, so it doesn't matter what accounting date you use, other than you need to make sure that at this point you should be in the current year for both of those applications, so that when you get to the end of the year, you can start January of 2020 and not have to worry that those entries are not going to post because there's no place to go. You have the current year, you have last year, and you have next year. Reminder, no entries, manual entries to cash, AP, AR accounts, or cost accounts in general ledger. Check your files in GL and job cost, like we just said. Lastly, corrections need to go back to the application of origin. So if you have an issue with an entry that came from AP, you need to fix it in AP. If you fix it in GL, you're out of balance. Okay. So make sure, again, that the entries are made where they need to be. If you need to make an entry to correct a cash account, make that entry in cash management, because more than likely that cash account is also, that bank account also needs to be corrected. So you can make entries in cash management because that interfaces to general ledger. You can't make the entry in GL because GL doesn't interface backwards to any place. It's a collector. Okay? So back to the application of origin. All right, so that brings us to the end of our session for today. I'm going to hold open here for a minute or two to see if anybody has any questions. If you want to type your questions in in the chat area on the GoToMeeting or GoToWebinar. Tina can read those to me. I also want to, before we hang up, remind everybody that there are some application procedure documents that are now available through OnPoint, through their website. And so if you guys are looking for training material, maybe for new employees or employees that are moving into a different area within the company, those procedure documents can help out as far as walking you through, setting stuff up and normal workflow procedures. Okay. So Tina, were there any questions at this point?
Yep, there is one question. Before I tell you the question, I don't know if you just mentioned that if people want the procedure documents, they can just email me.
Okay.
So yeah. So the question is, should the adjusted bank balance and reg balance, is that register balance, as of statement date match?
I think the answer to that is yes.
Okay, thank you. That's the only one we have.
Yeah, unfortunately, that reconciliation report and cash management is kind of a bugger. I believe that is the way it should balance. I would be more interested to see what the CM balance is to GL. Make sure that is in balance, and also make sure that there's no variances on that CM bank account balance verification report. If those have variances, I would correct those and then run the reconciliation report again.
Excellent. Thank you for that one. And we have one other question. It is totals by batch in AP does not equal the AP summary, but it should, correct? Any suggestions if it doesn't?
Totals by batch in AP
Yep.
should match which one?
Does not equal the AP summary, but it should, correct?
Correct. So what I would do, you can reprint the journal in APs. This is the first place I would start. Let me get back to here. Let me get back to AP. Under reports, invoice registers, at the bottom, there's a reprint journal.
Mm-hmm.
And do it on your AP master because that's where the posted batches are.
Okay.
You can put your batch number in here, and then that'll give you a list of everything that was entered in that batch, and then you can kind of troubleshoot from there.
Okay.
So you can either print it out, or I think in inquiry there's also invoices by batch here. So you can do it either way, report or inquiry. That's where I would start.
Okay. And there's sort of a follow-up statement to that, which I'm not sure if that was covered in what you just said, but it says there is a difference in summary, but none in AP totals by batch.
So what they need to check in these, either the inquiry or the report, check the dates in that batch. Okay. It could be that they had a combination of accounting dates in that batch, and part of it may have been left in the new file, the new.glt file.
Mm-hmm.
I've seen that happen before too.
Okay, very good. And then we have one other. When verifying jobs are in balance, what were the values that are updated? Estimate, category, code, etc.
Okay, so the dollar amounts that it looks for are estimate, cost, commitments, and dollars paid. But dollars paid are out of AP, so the check runs that you run in accounts payable. Those are the four types of dollars it's looking at, and it's balancing it from the total of the transactions up to the total on the category, up to the total on the cost code, up to the extra if they're using extras, and then up to the job.
Okay, very good. And we have another question. If the adjusted bank balance and register balance do not match, what steps need to be taken to find out why?
That may be a SAGE support question.
Okay.
That report, you know what, I don't know that I can answer that one. I think the first step to do is to run that bank account balance verification report, make any corrections there. You know, there are some knowledge base articles in the support KB knowledge base that you can, I think if you go into the knowledge base and just put in cash management reconciliation report, I think it'll give you a list of things that and I think out of balance might be one of the ones that's there.
Okay. All right. Very good. Okay, so that's the last of the questions that we have at this point, and obviously if folks have follow-up questions after that, that's
great. If you want to, if you want to email those to Tina, she'll forward those to me, and I'll be happy to do what I can for you.
Awesome, thanks.
Okay.
We're looking good, I guess.
Thanks everybody for joining us today, and I will look forward to seeing you if you attend again in the future. We're trying to have something for you every month, so everybody have a great rest of your day, and hopefully I'll see you soon. Thanks.